Hello, everyone. Happy, glorious Wednesday over here. We are going to give it a couple of seconds for folks to log in. We know it takes a couple of moments to transfer over from the waiting room. If this is your first time with us, hello, my name is Sadie Uribe, and I'm the media producer for the Los Angeles Regional SBDC. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. The LASBDC offers no cost services through funding provided by the U.S. Small Business Administration, SBA, and from the California Office of the Small Business Advocate. It's your tax dollars at work. Okay. And the Los Angeles Regional SBDC network operates 7 service locations throughout Los Angeles, Santa Barbara, and Ventura counties. Our services are also offered virtually. We are here to help. We empower small business owners by offering tailored solutions through personalized one-on-one business advising, cutting-edge workshops, and comprehensive programs, all provided at no cost. We are dedicating to supporting your entrepreneurial journey every step of the way. Lori, I'm kind of excited for today because I know that you guys, you don't understand. I get to see and witness the magic before we start these meetings, and I know you guys are going to enjoy today's session, right?
Absolutely, Sadie. So, with no further ado, let's get started for today. Okay, first of all, this is my upcoming webinars. I always tell people that this is the place to go where you're going to hear about every webinar I'm doing for the month. It's always a check in to see what's happening. I didn't identify October yet. I'll be doing that next, but this is what we've got going on for the remaining part of the month. Now, oh, I left out the date. The date's sitting there. But next week we got some two fascinating weeks coming up. We always have fascinating weeks, but we have two fascinating weeks. Ariane is coming on and she's talking about pop art studios. And this is one of those sip and paint studios. And I actually met her several years ago. I can't remember how long ago it was when she was first starting the company. And also now she is starting to pivot into something else. So you're going to hear a wonderful story about the troubles of starting, what happened during the growth, and then when you decide, hey, I want to do something else as well. Lynn is just starting Abundant Energy, but she's been a long-time entrepreneur. A little bit of a spoiler alert. You won't even believe this when you see her on camera, but Lynn is 70, starting a new company. She's been in corporate America most of her life, then had another company. Once again, these are seasoned entrepreneurs with fascinating stories. So it's going to be a great upcoming episodes. Be sure to catch those. Okay, so Lori's Corner, and Lori's Corner always has something, profound, I'd like to think, and it always is kind of a beginning into what we're going to talk about today. So I have two statements that I'm going to blend together and explain. So the two statements is there's no such thing as a small business anymore, and you guys have heard me talk about that before, so you probably have an idea where I'm going with this. And then my second statement that I'm going to make is just because there's not a position doesn't mean the activities I should have put are not required. Okay, so where am I going with this? So when I say there's no such thing as a small business anymore, I can explain this clearly and simply by going back to my youth of being in a small company and looking around and talking about what the entrepreneurs were then. They weren't called entrepreneurs. It wasn't Hollywood entrepreneurs. I talk about it. They were mom and pop shops. My parents had a small business in addition to my father working at the Ford plant. I definitely came from a blue collar worker family, as well as a town. And then my uncle had a tree cutting service, and then my neighbors all had their tire services, etc. Right? Well, back in those days, and even my mother had a catering service, and she also would sell at the farmers market, and they had aluminum and door window business. So I come really from small businesses all around me. And in that transactions, when you think about their transactions, no one paid on credit card. It was a true cash-based society, if you will. And in that, they didn't use a POS system. They didn't have deposits going into their bank account. They didn't have to calculate for vendor bills. Whatever my mother bought for catering, she bought in cash and she used within that week, which was cash coming in. So the timing of the transactions for cash was very close together. There was no unknown loans, if you're profitable or not, you could look in your hands at the end of the month or your bank account and say, either there's money there or not, I made money or not, right? But you fast forward to today's small businesses and you've got vendor bills, you've got these relationships, you got the POSs depositing money on this day, you got people invoicing you and paying you, you may be going through distributors, you have to pay a deposit. All these things are happening where it's not the simplicity it used to be at all. So what's happening is small businesses are subject, let's call it subject, to the same types of transactions, the same types of concerns over vendor bills, accounts receivables, accounts payables, credit lines that large companies are. The only difference is more zeros. One's $1 million, one's a 100,000 or 1,000. It doesn't matter. You can be selling a product at the farmer's market. You've got Square, you've got Stripe, you've got payment processing, situation. You may have gotten vendor bills. Just selling some soap at a farmer's market, you're suddenly exposed to all of these systems. Now, the other thing that's happened that my parents in my neighborhood was not concerned about is they weren't concerned about all the HR laws. They weren't concerned about the legal requirements. They didn't need to have a business permit. Like I've said to you many times, and I didn't think about this as a kid, but my mother basically, well, my father bought the flour on his salary to make the cookies, and then my mother made the cookies, got cash, didn't have a business license, and I know never reported to the IRS, right? So that's a pretty profitable business from my mother's perspective. So it was a lot simpler. Now, what do I mean when I'm now saying just because there's not a position doesn't mean the activities do not exist? They're not required. When I go through one of my webinars, the accounting tax overview, I talk about the different positions in a large company. And I just want to talk about a few. So you have a bookkeeper that's part of the accounting system, the accounting department, I should say, the systems within it. And the bookkeeper in a large company is really data entry. They're putting in data entry. They're putting in with the invoices, they're putting in the payments, right? So they're data entry. Then you have a controller, and the controller is running these reports, the balance sheet, accounts receivable, accounts payable, and they're checking, they're auditing to make sure the data was inputted correctly and all the reports align. They were checking, they're auditing, right? And then what you have is the CFO that's taking those reports plus running other reports in a spreadsheet to do internal decision making based on the financial reports, both historically what happened, currently what's happening, and forecasting what's happening. So you have a process where transactions are being recorded, somebody is checking the data to make sure it's correct, and then somebody is analyzing the data to make decisions within the company. Now, just because you're a small business selling at the farmer's market doesn't have maybe a bookkeeper, a controller, and a CFO, that does not mean those activities are not required. You still have to input transactions. It still has to be correct and checked for authenticity, and it still has to be analyzed to make sure you're making money. So this is where I'm coming from, the fact that there really is no small business anymore because things are not self-evident, if I can use that word. When you had the cash and it was exchanging within 1 month or even a day or a week, it was self-evident where you were and the cash could be recorded easily. But with today, it's not the case. It's just not the case. And why did I go into all this and why am I leaving it with just that? Because it's a perfect introduction to the discussion that we're going to have today. Dalia Fogenay is an accountant dedicated to empowering businesses through effective financial management. As the founder of DF Accounting Services, she has been instrumental in helping numerous clients streamline their operations, improve their financial health, and grow their businesses. With a strong commitment to ethical practices and continuous improvement, Delia is known for her ability to simplify complex financial concepts and tailor strategies to each client's unique needs. Delia, welcome to the show again and again and again. Anybody who's been a long time watcher of Small Biz Talk know that Delia is one of our loved favorite guests. Welcome back.
Thanks for having me, Lori.
You know, all the time what we do is we talk about your background and how you got into it, right? And I know a lot of people already know that. What I want to do is I'm going to ask you a complete different question. And it's one I know you can answer as easily as your background.
Okay.
What is it and why is it? Because I know this is a true statement that you love what you do. What do you do and what do you love that you do?
I I help small businesses grow their business in a sense where I give them more clarity and I let them know where they are. So with most of my clients, when they start working with me, I tell them like, what are your dreams? So I can hold them accountable to that, right? So as I see some of them, like a lot of people as they grow, they end up like kind of wanting more and more and more and more. And I have to bring them back to reality and tell them, like, let's remember why we started this so we can have peace of mind, so we don't have to add on more stress into our lives, right? So I do it just because I love helping small business owners. I feel that there's a lot of people in today's generation that wants to have like high ticket clients, but then if us as bookkeepers and accountants, we don't make ourselves available to the small business owner, who's going to help them, right? So I just like to categorize myself the person that's going to help the small business owner scale. And it's beautiful when you do see them scale, then you're like, okay, I do have my like client that makes multi-million dollars a year. So that's why I love my business because no one else is really wanting to help those clients out at this point in time.
Very, very true. And what I find unique about you, Dahlia, that I love it, you and I love taking and giving you as a referral, and I feel very comfortable because I've said this many times, and there's a truism to it. Up until the time I met you and Clarissa, and then some of the tax preparers that I've met through both of you guys, I would never, ever, ever refer anybody to a bookkeeper or a tax pre person. People would say, do you have a referral through the SBDC? And because my existence was working with bigger corporations, larger accounting firms, etc., it wouldn't have been a fit for the small businesses. And I had not met anyone that I felt comfortable referring. So I refused to refer, right? And so that's where now, when I first met you, actually, you were a guest and referred. That's how I met you. And Clarissa was somebody who was doing a client's bookkeeping. And I looked at the reports and said, wait a minute, this person knows what they're talking about. So, that's why I have you on the show all the time. But one of the other things I want to mention that plays exactly into what you're saying, you have a extended, I'm going to call it this way. So these are my words. You put whatever words in, these are my words. You take, that's the word I want to use. You take an extended approach with your clients, and so does Clarissa. That's why both of you, I totally respect. Whereas even to the point of, and I'm going to use a word you would never use and your clients would never use, but you even force upon them to look at the numbers and understand the numbers, not being the typical bookkeeper you find today that is just, oh, data entry and pop out a report. You make them look and analyze and understand. And so when you say you help grow companies, I will say that's true. I hear a lot of times investment bankers say, we help grow companies. I go, no, you put some money in and then you get a lot of money back. You're not really helping them to grow. But in your case, you're providing them with information and you're answering questions they're not even asking. Can you
Right.
comment on that?
Yeah, so like for example, a lot of clients that come to me, it's because they've had bad experiences with bookkeepers or accountants and they were referred to me. So a lot of my clients are organic. So a lot of people are going to notice like you're not going to see me advertising a lot because a lot of people come to me just based on experiences they had on in their past. And you'll be surprised that in our intake call, I'll ask like, "What was your previous bookkeeper doing?" And the answer is always, "I don't know." I will get a financial statement once a year or whenever I request it. I will send my statements once a year to them, and I'm like, "How are you in the know of what's going on to your like going on with your profit and loss statement on a monthly basis, right?" So I love how you use the word forcefully, but I'm not gonna use it.
I know.
But I pretty much say if because it's a two-way street, the potential client needs to want to work with me and I need to want to work with them. And one thing I tell them in the intake call, it's like I'm kind of like a teacher in a sense. It's like I want to meet with you on a monthly basis. I want to go over your financials and I want to see you executing whatever I'm letting you know you should do to grow your company. Because it's an excitement on my end when I see them executing what I know is going to help them. Because if I see like a company just stay consistent where they're at and they're not really growing, it kind of, for some reason, makes me feel like a failure, right? Like I feel like they're just pouring their money just to live by. But for me, it's more, hey, let's go over those numbers. Not only just go over those numbers, a lot of times I give it to them also in percentages. So, like
Yep.
for example, like their P&L, I have a financial review that I attach with it, a financial summary, I like to call it. So I tell them, you brought in this amount of money, but your cost of goods sold were 45%. Remember, our goal was 30 to 35%. So let's aim on bringing it down. By communicating that with them, I tell them, your next focus for the next quarter is to find a wholesaler that can give you better pricing or negotiate with them. You've been with them for a long time. Let them know that you're spending over 45%, technically 50% of your money, right, towards cost of goods sold. How can you even profit off of that? Because you still got other expenses. So I like to do that with my clients. And then I notice like my clients end up being motivation, like it's motivation to them. I have some people that are content creators and I tell them what digital product is working. And next thing you know, you notice that they're pushing the same product even more compared to a product that wasn't selling that much. So that's the difference of what I do compared to other bookkeepers. I'm not gonna lie, where I come across a lot of other bookkeepers and they're like, you're over you're overproducing your services for the fee that you're charging. And for me, it's just more, I know what has worked for my company and my business. And this is why my clients stay with me long term. It may feel to you like you have to charge them an additional service for this, but for me, it's like a way I can help them without overcharging them.
Okay, there's so much to unpack in what you talked about. So first of all, what you said about the percentage of cost of goods is priceless. And guys, that's CFO speak. That's what I teach actually in my classes is how to figure out what I call the cost structure for your revenue, what percentage is the cost of goods, what percentage of the expenses. And it goes back to this concept that knowledge and wisdom is power and small companies don't have any concept on how to even calculate those percentages, right? So that is completely priceless in having that understanding. Okay, one more comment, and then I'm going to go where I'm going with this is that I love what you said about some people say you overselling your services, but giving them knowledge is helping them to be profitable, helping them to maintain as a client, because people who are not profitable can't pay for services, right? And it also, keeps from client acquisition because there's a learning process in setting up for the new bookkeeping. So I think that's ingenious. Okay, we're going to go in two different directions. So where I'm going to do is now, and it's all got a method to my madness like it always does. We're going to back up and without going into great detail, because I'm going to use it as a point that I'm going to launch from, I would like to ask a little bit about your background in educational training. And Dahlia, a hint of where I'm going, but you probably know. You took a QuickBooks training course, right? Now you're a QuickBooks expert, so you know where I'm going with this. So
Yeah.
just give a feel for how it is that you even know to create the percentage of cost of goods. How did you even know to come up with that? What's your educational and background training?
So I've been in this industry like over 12 years. So I've been in this industry for a very long time. But before I decided to go into business, I was working as an accountant in a firm, like for companies, right? So for me, I came from having like several years working in different companies, developing companies, and my position was very unique just because I was able to go to different companies. Sometimes it will be every other week, sometimes it will be different months. But my job was really to cater to companies who people were going on maternity leave, people who just randomly quit their job and they needed someone to fit, like to just jump on that roll real quick before they found a new permanent person. And I think that's why the structure of my company is not like a niche where I only cater to one industry. I cater to several industries because when I was working a corporate job, a 9 to 5 job, I would jump around to different companies and that exposed me to different accounting softwares. It exposed me to different methods because there are different methods there. And it kind of put me in the place where I just didn't do accounts payable for so many years, like for 10 plus years, or I didn't just do AR. I did every role in the accounting industry. So that's what my background is in.
And that's where I think it really pays off. And I, as CFO turnaround, had to walk into all these different accounting systems. And it's hard because you're trying to figure out what is the behind the scenes technology calculations in order to figure out what they've actually done. So I completely understand that. Okay, so this brings us to my purpose of having Dalia on today, guys. I had to go through that whole background as well as my Lori's Corner because this is what I would like to talk about. So, Dalia, when you talk about the fact that when you ask somebody what their bookkeeper is doing and they don't know, and they say they see a P&L once a year, and I'm going to add on, they may not even look at it. I know what you're telling me is complete truth because I am hearing it from the SBDC clients on a daily basis when I go through the numbers to help them to look at their numbers from a financial management. Most people have no idea what their bookkeeper's doing, or they are doing it themselves and they don't have any communication with the bookkeeper. When I have them run internal reports, the things I see on those reports are really strange. They're
Mm.
not correct. You can tell they didn't communicate with somebody. Their numbers, I had somebody have a owner's draw and it had a positive number. I've never seen any. Yeah, like how can you owner's draw a positive number? I mean, I see things that are so ridiculously incorrect. It's just obvious, I guess I could say, right? So what you guys, when I said I wanted Dahlia to come on, my first thing, and it falls within the same theme, was I wanted her to talk about two different things that we bring up quite a lot, and that is the journal adjustments, and we'll talk about what we mean by this, that has to be done with both anyone who has an employee and has helpers and anyone who is using what's called these merchant cash advances, such as Square and Stripe, etc. So I first said, Dale, come on. The people don't understand this. We had some bankers come on and talk about this. I want to go into detail enough so that people at least get an idea what we're talking about. Then I realized there really is an overarching theme that these come under. And here's the theme, guys. And it falls into Lori's Corner. You guys have been, let me put it this way, sold a lie. I don't know how else to tell you. You've been sold a lie. Now, who's lying to you now? That's how I feel every day. I go, well, who's lying to me today? Who am I going to find out lying to me today? Okay, so who's lying to you is QuickBooks, Intuit, and the like. Now, what are they lying about? They're lying to you with this perception. They're not coming out and saying it, but they're giving you a false perception that all you have to do is connect your bank account to your QuickBooks and your credit card to your QuickBooks or any software, and you just flick that switch and it just happens. And all those positions, my beginning comment of being a bookkeeper, a controller, CFO, but I'm really talking about the bookkeeper and the controller aspect, they're not even needed because the computer is going to do this all unchecked. Well, this is not true. So I'm not saying you must hire a bookkeeper. I think it's a good idea, but I'm not saying you must. What I'm wanting to talk about today is whether you are doing it yourself or you're getting a bookkeeper. Many of the bookkeepers are not trained in accounting, don't have an accounting background like Delia, so they don't know anything other than the computer themselves. They're not doing the checking either. And so what I'm finding is a lot of my clients I see at the SBDC aren't even aware of what we're about to talk about. So my goal for today's show was really to just create an awareness like, oh, okay, there's more to this than I thought. So our main theme is, in addition to the downloading of data, what other activities have to be checked? What other journal adjustments have to be made? What does Dahlia do on a monthly basis for her clients to make sure the data's correct? So, Dahlia, I want to let you kind of decide where to go because you might want to start with more of a theme by maybe whether you turn off the automatics or what to get us started before we delve into just Square or CalPERS. But what do you do in addition to or to begin with? Because downloading the data is where you're really starting. You're starting once that's done. That's where your work begins. It's not where it ends. So I'm just going to let you begin with the foundation and take off from what I was doing in my intro to explain to everybody what we're talking about today.
Okay, perfect. So I love how you started saying that a lot of people, like I said earlier, they reach out to a bookkeeper once a year. The reason why that can be a little bit dangerous today in today's generation, right? It's because, like you said earlier today when you started, there's so many things being thrown at us, so many software, so many systems. Like, hey, if you do this, we can offer you this, and it'll make it easier. I mean, the only easy part is connecting it, I would say. But when
Yeah.
it comes to those things, is I tell everyone, when you're introducing any type of software, you have to study it. You have to know, you can't just assume that the software knows how to communicate with another software, no matter even if they promote it, you still have to study it. So, and even with QuickBooks, what I notice is that if you're someone doing it yourself, and you have to understand QuickBooks is constantly changing their software. Like right now they have like this AI feature and all accountants are complaining about it because it's not really as smart as they're promoting it to be. It's making it more difficult for us because we constantly have to kind of refresh ourselves and learn the new system. So, but that's us accountants. We know accounting terms compared to someone who doesn't really know too much of the accounting industry. I can just imagine how overwhelmed they may feel, right? They're like, we just learned the system. Now it's a different feature. Now I got to find out where these areas are at.
I
When,
want to interrupt for just, and I don't want you to lose your train of thought, but I want to make a point to what you said so the audience understands. I
yeah.
always said that QuickBooks and many of these software companies do not sell to us as customers, you the informed, me the informed, because we know the questions to ask. They sell to the small businesses, uninformed, and they show somebody using their phone, taking a picture, and growing their company in the background. So I just want to make a point, guys. They don't market to the people who know the questions to ask. They market to the people who don't. And that's exactly what Delia just said. So please, I didn't mean to interrupt you, but I wanted to really help people see what's happening here. Continue.
Yeah, no, it's so true. That's how they advertise. They advertise where you can do it yourself. But when you dive deeper in, there's a reason why QuickBooks has their own QuickBooks staff to help people with bookkeeping because they know their client eventually is going to get frustrated and is going to want additional help. They're in the accounting industry as well, believe it or not. They have their own tax preparers, they have their own accountants in their company. They're not just selling a software. And then they also rely on us accountants to stay in their software because they want us to also help them bring people to utilize their software. So it's interesting when I see them advertise that way because for me, it's more, you guys should advertise towards us accountants instead of people to do it themselves because it's far from do it yourself software, right?
And you know, Delia, to that point, so me being older, back in the days, because QuickBooks from the desktop software has exist for what, decades, right? It used to be a software that was advertised and used only by accountants and bookkeepers, but it was used by accountants for small businesses, so you didn't have to invest in like a Sage computing software that was so expensive. So it wasn't until the entrepreneur phase that they started this DIY software and online, and they started to market to the smaller companies that really didn't have any sophistication, and it made so much money they went from there. So you're correct in where that origin started.
Yeah.
So in that, with the buyers of the software and many untrained bookkeepers, because even the QuickBooks trained bookkeepers don't seem to know what they're doing. It's been my bad, I've had really bad experiences in trying to talk with them. They don't understand accounting. When you have the software download the data, can we start out by talking about the fact that you're looking at each transaction and I call it auditing because we both in finance call it auditing, but I'm using the word look at so people understand what I'm talking about. You don't just let that data come flying in and don't check it. So let's start right there. What do you do once the download takes place? What do you do next?
So there's several steps that goes into that, right? Because what QuickBooks would suggest is for you to automatically match that deposit into the bank. Um, so if you have your QuickBooks account, if you have your bank account connected to QuickBooks and then you have a deposit that went into it, it will automatically say show deposit as a gross, but not, in reality, you have to break down that deposit. How much was what's the gross towards that sale? How much went into merchant fees? Because where Square fails, QuickBooks is a little bit better. Like processing system with QuickBooks is better because it charges it separate. So it would take the gross amount and then it would take away the merchant fees. Where you have Square and Stripe that they're doing it on their end, but when it's coming into our bank account, we see the net profit. We do not see the gross. So there's several steps. We have to do sales receipts. We have to log into Square or Stripe to see how much the merchant fees were for. And we have to make sure that our software shows the gross amount. Because if we're only coding the net, the deposit that's coming in, we're selling our company short. We're only showing our net instead of our gross. One that's horrible for taxes because you're going to have obviously a lower tax bill because you're showing net instead of gross, and then you're believing you're bringing in more money, but according to your deposits you're not, right? That can, like, when you're applying for loans, that can really damage it because you're showing you're bringing in much lower money. So it's a lot of steps. It's a lot of reconciliation with those accounts alone. And what people fail to know is that in order for Stripe to even transfer over those deposits, they want you to um, pay for different apps. So now you're adding on to another fee, to another fee, to another fee, because now Stripe has decided to say, hey, we're teaming up with QuickBooks to a certain extent. If you're using these apps and paying additional fees for these apps, then we'll transfer that information over, which will be the gross, the merchant fees and stuff broken down, and then you can match it, right? Well, now they want you to pay an additional fee because they don't want to offer you that for free anymore. So a lot of people are not aware of that the breaking down is incorrect because all they want to show you is one lump sum of money, but they don't want to show you what product that was. They don't want to show you how much went into fees. So that
Yep.
could be
And so,
dangerous.
and guys, let's walk through this again one more time because what Dahlia is saying here is really important. And especially is because I'm seeing more and more people use these merchant cash advances. And I'm talking about, I think, I don't even keep up with who does it, but I think PayPal may do it, Stripe does it. You know, these where you're getting an advance on your sales is what we're talking about. So what happens is I'm going to make it where it's incorrect mathematically, but just to explain. So say that you sell a bunch of widgets that month and the widgets get sold for 2,000, but you owe back on this cash advance. So the company that gave you this merchant cash advance, maybe they took off 500 before it even goes in your bank account. So 1,500 goes in your bank account. That's all you see. You don't see that 500. Now, I've talked about the fact that means you don't understand the interest rate, but that's not what I'm getting into right now. So when you sync with your bank account, it shows 1,500. Well, so when you report to the IRS, you're reporting 1,500, but what is the actual sales? What is the gross sales? It's 2,000. So if you're syncing with the bank account without making these journal adjustments, you are underreporting your revenue and you're not taking off any of the interest. So that's what Dahlia is talking about. So this goes back to what I'm saying is there's no such thing as a small company because you think, okay, I'm going to take this cash advance. It's going to be beautiful. I need the money right now. Aside from the interest rate, you could get audited by the IRS and show you're not reporting your income properly. Anything I said incorrect or you want to add on what I just said and kind of going through it as an explanation once again?
I love what you just said because as business owners, we have to remember that we agreed to follow compliance. And compliance is having correct financial reporting. If you're just showing a deposit and not breaking that deposit down, you're showing incorrect financial reporting. You are technically committing fraud.
Yes. Yes.
So I love what you just said. 2,000 is a good number. So let's say you sold a product for $2,000. Now when you're in QuickBooks and you have to break that down, right? Like we like to call it journal entries, we like to call it different things, right? So when that money comes in, there's this option that's called split on QuickBooks. You have to show what 2,000 was gross, let's say 500 was merchant fees, then you were left with 1,500. But if you got yourself in a situation, like I know Clover does this, they're another merchant processing system where they let you borrow a loan and they said, hey, instead of you making monthly payment back to us from your bank account, we'll just take it. We'll take our fee from your sales, right? Now you have to do an additional adding to that 2,000. You have to say, well, 500 is going to paying back the loan because Clover's not going to break it down to you that way. But you have to show from this 2,000, where did all the money go to? Why am I only showing 1,500 instead of 2,000 in gross? Because we all have to understand that the IRS knows how much money we brought in. The moment that we sign up for these merchant processing systems, they're sending a 1099-K form to the IRS. So if your gross is not matching what these forms are saying, then you're already like technically in their eyes, this looks fraudulent. And that's a very dangerous place to be.
It is, and I'm glad you mentioned the 1099. And this goes back into, guys, why I'm having this on my show today. So, the IRS has changed the minimum amount of transactions that companies like Vimo and PayPal, et cetera, have to report to the IRS. And it goes on a 1099-K. And this is coming to be as low as, I think it's 5,000 this year, if I'm not mistaken, if I remember correctly. So what that means is that the IRS is getting a document that says that 2,000, okay, it's showing you the gross sales, the 2,000, and your QuickBooks, if you didn't do it properly, it's got 1,500 because that's the bank deposit. And Delia, what I tell people all the time, and you guys on the show have heard me talk about the dead bodies, from auditing, I go, well, the dead bodies and the hand hanging out of the trunk. What I find, and you can comment on this, and I'm sure other tax preparers listening go, Lori, I can't believe you're talking about this. But what I find gives the greatest chance of an audit, and I'm talking about not only from the IRS, but the state, et cetera, is when their standard forms do not line. Like they're not necessarily digging through it as much and going, did you really spend that amount on marketing? But that's what everybody's afraid of. Where you get caught is when it goes, well, the 1090-K says this, and your revenue says this, because they have computers that check this data. Just like people will do, okay, you got a business address, but you don't have a Schedule C. It's when these forms, and this is where I find the small companies are getting audited, is because they're not having the forms be aligned in the numbers, or they're not filing the forms at all. And that's the dead bodies. You're like showing something immediately is not being lined up properly. So before I pass this on, I want to make just one more point that I don't think our audience that is aware of. When you're doing bookkeeping, and Dale, you mentioned this, you have to make sure maybe you check the POS system here. You maybe have to check the sales receipt. It's not a matter of just using the bank account and the credit card in the transactions and data entry. It is also pulling, what is the loan statement you got to show the interest? What is your sales receipt showing to see how much you sold? So when you're doing your task, you're also going to other original documents and data from other sources, be it Stripe, be it a bank loan you have, what have you, and you're looking at those reports. Oh, payroll is another one.
Mm,
Reports from ADP. I'm leaving out a big elephant in the room, right? So when you're looking at the making journal entries into the accounting software, you're looking at the ADP payroll accounts and making sure that aligns. You're looking at the Stripe account and making sure that aligns. You're pulling in all these other documents to see that they're in alignment. Delia, I don't think that the small businesses understand that aspect of bookkeeping, that audited, that part that a controller plays within a company. I'll pass it on to you to comment from there.
yeah, so I think the way that bookkeeping is promoted, that all you do is categorize and reconcile a bank statement, and that you just send someone a profit and loss statement. That's far from bookkeeping today. Maybe bookkeeping when we, like you said earlier on the call, when you were working on a cash basis and you were a small business owner and where you knew exactly where your cash went, where there was no fees involved whenever you were taking payment, right? Now, bookkeeping has to be a little bit of CFO work, a little
Yep.
bit of controller work, because we have to now make sales receipts like you stated. It's not no just categorizing. When you start introducing all these other softwares to your firm or your just in general your business, you're now making the accounting aspect of it a little bit more difficult. And this is why small business owners are kind of having to spend money on a bookkeeper because they can't do it themselves. The other thing I would say is that if your bookkeeper is not requesting any 941s, any 940s, and we're talking about these are payroll
Yep.
reports, if they're not requesting that, that's a problem because that means they're not double checking and reconciling that your payroll is matching whatever came into the bank, whatever was taken out of the bank, because sometimes they reimburse you, sometimes a payroll is canceled. You want to make sure that it was deposited back into the bank, right? Then when you get audited, the first document, they're gonna always go with the easy stuff. They're gonna go with the 1099Ks, any 1099 INTs, any 1099s, things like that, any 940 reportings and 941 reportings. They want to make sure that your income is correct. They want to make sure your payroll matches what the forms say, right? Then they move on to the more other stuff, which they want to make sure your loans are reported correctly on the balance sheet. And I think a lot of people forget that. It's not just about your profit and loss statement, it's about your balance sheet. When it comes to an audit, I think what gets a lot of people audited too is that one year, okay, you had this loan for 3 years. But the first 2 years, you never wrote off interest. All of a
Yes.
sudden, you want to write off interest, or like a vehicle, or there's certain expenses you never wrote off in your business, and now you're writing them off. It's very important that you have really good reportings. A bookkeeper should also kind of think with a mindset of a tax preparer
Yes.
because I work on my financial statements, making sure that it kind of aligns when it's time to file returns, right? Because a lot of times the tax preparer will even say, wait, this is a business. Why are they not writing off telephone? This is not making sense, right? And my job throughout the year is saying, hey, I notice your telephone expenses are not hitting your business account. There's a possibility it might be hitting their personal account. Can we please move that on? And can I make a journal entry the first 6 months of the year that you weren't writing it off through the business? I need to make sure that I record that because I don't want it to look interesting where like you're writing it off and then you're not writing it off, right? So those things are very important.
Oh my God, so much you said. I was like making notes real quick to be able to unpack it because it was so important. When they talk about all you have to do is the categories and it checks it with the bank statement, that's QuickBooks really saying what you have to do to check those two things for their own system. They're not taking into consideration auditing for accuracy or the IRS or the tax, etc. And that mentioning you did about the ADP, the payroll not being reconciled with the 940 and 941, just as a quick comment, I've seen somebody who did not reconcile underreported the taxes they collected because they didn't check the mistake. Yes. So one employee or two employees didn't get the proper submissions for their taxes on the 940 and 941. It went about 4 or 5 years before the IRS and the Treasury finally caught it. Anyone who touches payroll is liable for that. You know how IRS is. So, long story short, the owner and his two daughters in payroll have liens on their house and a fraud filed against them. When Dalia said it's fraud, it is considered fraud, and you get that against you. And I don't know, or my bookkeeper did it, or my tax person did it. You, the owner of the company, are the one responsible, not the bookkeeper, not the tax person. So that's so important to understand. And the balance sheet is so true because I've seen people, like I've looked at their tax returns, they don't show any interest for loans. Then they want to get a bank loan to consolidate their debt. And the bank's like, you don't show any loans on your tax return. What debt are you even consolidating? So you guys can see that there's it. And once again, go back to if you just are selling doggy sweaters, at the farmer's market, you're collecting cash, you're not having any of these other aspects in your company, then it's not that complicated. But I don't see too many small companies operating that way anymore. And that brings a whole level of complication. Before we end, for those who have employees, you shared with me something. And once again, guys, this is going to possibly be confusing, but it's more to get you an awareness. We had a talk one day, Dahlia, about CalPERS. And am I getting it right with CalPERS? Is that the right name? Okay. I was, because I haven't stayed up on this, Samara talks to me on the HR end about CalPERS, and the need for, even if you have one employee, so you have to tell people what it is. When you started talking about the accounting journal entries with CalPERS and how wrong it can become, I was shocked, and it made total sense to me. So without delving into it, but just a few minutes, so anybody who has employees, one employee is at least aware. Like I said, I'm trying to create awareness today. Tell us, what is CalPERS, and from an accounting perspective, what do you have to be aware of with CalPERS?
Are we talking about the Cal Savers?
Yes, that's it. I knew I was saying it wrong. I knew I had it wrong.
Oh, no, I thought at first because there's other platforms that offer accounting services, and I think it's Kelpers and Keepers, one of those. So I
No,
thought you
I
were going to
meant
go that way.
Cal. Yeah, I
Yeah.
don't stay up on it. That's what I'm talking about. Thank you for
Okay.
correcting me. I knew I had the wrong word, but I knew
Yeah.
what I was trying to say. So
Once you finished, I kind of figured out because me and you had a really long
we
conversation about
did.
this.
And I was just like, oh my God, because I had the conversation with Samara and then I had the conversation with you. And I thought my Texas accent came back from time in Texas. I thought about the small companies with just one employee. I was like, bless your hearts, you don't even understand. So
Right.
just briefly talk to this to anybody who is in this boat with one employee and needs to have an awareness.
Yeah, so with the state of California, and I think I just heard yesterday that they are moving this everywhere to every state. But for now, we're just going to talk about California. You are required, everyone in California who is a business owner and has employees is required to offer their employee a retirement account, right? So pretty much what happens is you have to ask your employee, would you like to do like, from your paycheck, have money taken out and put into a retirement account, and that's going to be all through CalSavers. Now, what people think is, oh, the threshold is three, because now it doesn't matter if it's full-time or part-time. Even if you have three or more part-time employees, you have to offer that. But it's constantly changing. And a lot of people say, well, I only have one employee. Doesn't I can ignore it. It doesn't work like that. CalSavers still wants you to submit your information, your business information. It wants to know um, the address and all the little details that about your business, and then it wants you to know your employees, how many hours they work. Then they'll be the ones to determine if you can or you have to or you don't have to. A lot of people, what they're doing is, oh well, I don't have three employees, so that doesn't matter. I just ignore it. It doesn't work like that. We have to at least submit and allow the system to tell us if we qualify to offer or we don't have to offer it to.
And I want to comment on this. This is one of those dead bodies because your payroll is reporting to know you have an employee, and then they can look and see if you hadn't filled out these forms. This is where it can get audited rather easily. Is that correct, Dahlia? So it's a red flag for a business owner to be aware of.
Yeah, so the other problem too is that because this is really new, they haven't even teamed up with payroll software companies. So what you need to do, and this is why it kind of relates to the story you just told us about them not reporting the correct amount of taxes. Well, let's say you're running payroll like you're so used to running payroll, and this one of your employees decides to chip in 3% of their paycheck into this retirement fund.
Okay.
If you don't go into your payroll software and say, can you please withhold 3% because that's going to go into a retirement fund through CalSavers, if you don't report that, the client's going to get, I mean, the employee's going to get everything. Plus, you're going to find yourself seeing withdrawals into that retirement account, but you're funding the
You're
retirement
funding the
account.
retirement
And
because
then,
you didn't tell the company to take it out. Now, while
yeah.
we're there, if I had a traditional 401, I would still have to tell the payroll company to deduct it and send it to the 401. Is that true? So it's just that the companies aren't familiar with how to deal with retirement accounts. It's kind of being forced. I'm going to use the word forced now, forced upon them to suddenly know that they have to set up this CalSavers, not only internally bookkeeping wise, but also with the payroll company to make sure it's being deducted properly. Did I get it right?
That is correct. And also keep in mind that you'll see two different withdrawals, one from your payroll software company and one from CalSavers, because it doesn't team up together yet. So it doesn't come out in the paycheck, right? Where let's say maybe you may have a SEP, a health savings account, traditional IRA, Roth IRA. It may team up with your payroll software. It's been around for so long. So just keep that stuff in mind. I also see like people make the mistake where they are investing into other avenues, but then they don't have it like set up in their payroll software. And I feel like they can avoid paying more taxes by letting it know, hey, by the way, I have a certain amount of my paycheck going to health savings account and different things. That's why when people start running payroll, keep in mind you're now taking the role of an HR representative.
You are totally. And this goes back to what you said at the beginning, how you can't just hook up the software, even in ADP, you have to understand what the software is doing. And it goes back to, like you just said, you're now being an HR person, even though the positions aren't in your company, you don't have an HR consultant in your company or an HR department, the activities are still required. And that's where I go back to the small. I mean, my mother forced me to work at the farmer's market. I'm using the word forced. And you know what? I didn't get paid, and that was child labor. But I can guarantee she was not concerned about that at all. Today, she'd have to be, right? So it's a different playing field than it ever was before. So if you look at your client and the time you spend per month on a client's accounting, I would say, and you tell me, the greatest percentage is really auditing and making journal entries. I mean, that's what you're doing every single month. And see, where most people think that the bookkeeping is just to make sure the data goes into the system, but really the bookkeeping begins after the download. Not The bookkeeping is not the download. The
No,
bookkeeping is after the download. That's
it's
what
a lot of,
happens.
I was gonna say, Lori, it's a lot of communication too. In today's generation, in the way that technology is evolving, and there's so many apps and softwares than ever, I find myself discovering something new, even with clients I had had for a long time. Discovering, hey, I noticed you just tuned in into a different merchant processor.
Yeah.
Now you need to give me access to that. Now I have to make sure that I'm allocating that money to the right vendor. It's constantly in being in communication with the client, like what's new? What new thing did somebody sell you on? Because we have to make sure we're reporting everything accurate and we're staying in compliance. That's why I tell people if you're an HR rep for your and running your own payroll, that means you're taking the liability and the responsibility of staying in compliance when it comes to payroll. So yes, you're saving yourself money by running it yourself, but you also have to be responsible by being educated on what compliance is. I have to give these employees a welcome package. I have to make sure that I'm paying them a fair amount. I have to make sure I'm paying them on time, direct deposit information, collecting I-9s, making sure everything matches because sometimes as business owners, we just rely on their word. Okay, this is your social security. Thank you for the W-4 form. And then next thing you know, you figure out like this is not the correct identity. Like when at the end of the year when you have to issue out W-2s.
Yeah. A couple things. So what you're speaking of, and everybody on the show's heard me talk this before, in my opinion, there's a perfect storm. The complexity from a legal, financial, regulatory aspect is going through the roof. And
Mhm.
the marketing to the small companies of the simplicity of these apps and software is going in the other direction. You don't have to do anything, you push a button. So this is a perfect storm. It's even more complicated, but they're telling you it's even more simple, just push a button. Which brings another thing to, oh, and I knew there was 3 points I want to make. The second one is if you wonder if your bookkeeper's doing a good job, if they're not calling and asking you questions when you have this, you know already that they're not. Okay, when you were speaking on that, that came to mind. So here's the third thing, thing. And I am definitely more strict on keeping the data sacred, being the fact that I'm legal plus CFO plus IRS. I see the whole trajectory. So I'm like, IRS data should be sacred. If you're gonna, if you're gonna report, don't create a red flag accidentally. I'm very much into that, right? So I have a strong opinion on something, and I'm probably over on this, Dahlia. So I'm going to tell you my opinion, and you might go, okay, Lori, that's a little too extreme. This is my opinion on it. This has to do with the connection of software. You've been talking about connecting different software to your accounting software. So when I was going in all these different companies like you were, and they had all these different accounting softwares, they were still like expensive software systems, right? But you had Sage, and it was set up for this manufacturing, or it probably you're familiar where it sifts AutoCAD and does an all that, right? So
Mhm.
whenever we would go in and we would have to learn that software, they would connect it to an inventory app or connect it to a project management app. But when we did this, they always had what we call crystal reports, where we would meet with the high level accounting reps from those companies. We would make sure the software was customized to run hopefully seamless with the apps we were using. So we didn't just like download an app and connect it. We actually had a team between our CFO and the team of accounting people at that software to integrate. And then we had the controller running the reports to make sure the integration was proper. And then we had the IT person backing it up constantly in case an error is found. Okay. That was the process to connect all of this because we knew our data was sacred. Now you take the small business, they're downloading and connecting apps to their accounting software, just like I'm doing an app to figure out, what's the weather today and what's this. They're not treating it any differently. And I say, keep this data sacred and be very conscious before you're connecting all these apps, and do it as little as possible, only the ones that are necessary, because I've seen people connect an app, corrupt the data. And I always say, you got to remember, you reported this to the IRS, and like we mentioned, if the IRS suddenly sees something they never saw or a number's out of whack, that's what could trigger an audit. So in summary, I'm not a proponent of connecting all the software. I'm only going to connect what's absolutely necessary. It might be a Stripe and ADP only like that. And I am going to be very careful to make sure I monitor the balance sheet and everything when this software is connected. What's your thoughts?
Oh my gosh, you took me back to like back in the day when I worked a 9 to 5 job. Like just not relying just so much on the system, but saying you're manually gonna, someone in the warehouse will manually enter the inventory,
Yep.
and then the controller will physically walk to the warehouse downstairs and make sure that they didn't lie on the inventory. It was that serious. I
Right.
love that part of working in the industry as well, because it was just like, we're going to make sure everything ties into the system, but then we're going to double check as well. Where today we're
Big
not getting,
companies, big companies still do
yeah,
that. It's only the small companies that don't. The big companies still have to do that. Yes,
and we have to do
absolutely.
that too.
Yep.
Because when an audit happens, it's like they do a walkthrough with you guys. Like you guys
Oh,
don't
yeah.
understand. So we have to constantly be on audit mode. I tell everyone,
Yes.
every 6 months is an audit mode for me, like constantly. Like I'm discussing stuff with the client every 6 months. I'm like jumping on a 1 2 hour Zoom call with them.
Yep.
But back to what you were saying about like not being a fan of connecting all these softwares and apps, I absolutely agree. For me, we're only gonna, so I use Gusto. I love Gusto. Gusto gives us Gusto payroll. So Gusto, I'm going in there and mapping where I want every single category in the payroll to go into my chart of accounts. So I physically go in there and say, okay, salary and wages, I wanted to hit this chart of account. Reimbursement, I wanted to hit my reimbursement account. That's the only thing I'm connecting. Payroll, and the other thing that I would say that I'm connecting, it's like I would say what I don't want to connect. I don't
Yeah.
want to connect Stripe,
Okay.
Square,
Okay.
because the reason why, it's because it's not a reliable software. I had a
Got
client before where I found a missing $30,000 being paid out to him. And it's because I had to reconcile that because they were collecting all the money and it was showing him in the reporting that he sold this $30,000. Let's say he sold like 100,000 and that 30,000 was involved in it, 90,000, 100,000. But then I'm like, why is the bank account not reflecting that he
Right.
brought in that
Because you're
additional
reconciling two different reports. You're not letting the
Right.
software do it. Yes.
And it's a difference when you reconcile just the bank account.
Yep.
Obviously, it's like every deposit that goes in, this is not a deposit that went
Right.
in. So how
Right.
would you even know, right? So
Exactly.
I found with Square that they were holding, Square holding tank $30,000 of my client's money. And they said it's because they he just had to tell them where they wanted him to deposit the money, them to deposit the money. I said, that's interesting. His account is connected to Square. You're depositing the rest of the money. Why haven't you made the decision to say, let's deposit this $30,000 into the same account? We're depositing the rest of his deposits.
Yeah.
So I say that to say, I don't like doing the connection because I want to manually reconcile Square and Stripe because they have this horrible feature sometimes where like it makes them reset or reconnect their bank account. And if you don't do it, let's say they don't do it for 7 days, they ignore that error message, then they put that money in a holding tank and they forget
Oh,
to
yes.
notify the employee. So that's why I say I don't connect. The only thing I do want my clients to connect besides payroll is their bank accounts and credit cards.
Yep. Okay, makes sense because I was even guessing on Stripe. And it's so true because in the olden days, you would have entered the stuff from this report and then you reconcile with the bank account. When you reconcile with the bank account is the bank account. It's not showing any other reports. Can you believe we're out of time here? We're out
I
of time.
know. I
Oh, I
love
know,
it.
it's amazing. And so I want to give Dahlia a minute to conclude, but you can see, guys, I just wanted to bring all these so important topics up because I'm seeing people get the legal letters. I'm seeing the tears getting caught. I see it quite a bit. And it's something that is not being discussed. And therefore you don't even know. So thank you so much, Dahlia, for coming on and going through this. And in the audience, if your head's spinning, I'm sorry. I know that it probably is. If it's just an awareness, just like, wow, I didn't realize all these things, then I achieved what I set out to do today on the talk. I just wanted you guys to have an awareness. Dahlia, last thoughts that you'd like to give?
Yes, I just want to. One of the main things that concerns me, and I see this happen time and time again, is that I see companies grow. I see, believe it or not, a lot of small businesses are growing faster than ever. You may not feel it for your business, but it's happening. All it takes is that one client to place a big order for your company or to give you consistent workflow, right? And one of the sad things I've seen is that you see these companies bringing over $1 million and don't have no financial reporting, do not have no accounting software keeping track of everything. They know they brought $1 million because of invoices they sent out, but they don't have no reporting. So when it's time to even take it to another level, because sometimes you're going to have an opportunity where they may want more product from you. So you need to take out a business line of credit to buy more inventory. But the problem is you don't have financials. And
Yep.
then they come here and they want it done within a week, but then it's going to cost you a lot more money because you want it done so fast. And it's a lot of things like we discussed today that go into it. So I would tell everyone it's best to start somewhere rather than not starting at all.
That's beautiful. That's beautiful. Thank you so much. We're going to have you back on as we always do because this is an important topic to continue to discuss. Sadie, I know we ran over a little bit, but it was so important. I want to bring you back on. It was quite intense, wasn't it?
I mean, I learned so much. I mean, that's why I was excited and I was like, "Oh my God." Like for me it was the 30,000. I was
Yeah.
like, What?"
Yeah. That's what I like to do on Small Biz Talk, and everything I do every day is bring up these topics that you have to have enough of a being up here to have an awareness to speak of it because I can guarantee those companies marketing to you are not going to. So, with that, Sadie is going to stay after as she always does. So, you can get Dahlia's information. Like I said, whether you're doing the bookkeeping yourself or not, it's not my statement that you have to have a bookkeeper. My statement is these things have to be done. Whether you think it does or not, it does, because you don't want government regulation to send you nasty letters. I know, because I'm working with SBDC clients on a daily basis who do receive these letters and don't even understand that. So with that, I got to take off. I'm going to say to those frequent flyers, Emma, a couple people, Chris, I saw your names out there. Thank you for being here every single week. I sure appreciate my frequent flyers. If you are new to the show, join us again next week for another episode of Small Biz Talk with your host, Lori Williams. See you then. Bye-bye.
Bye. All righty, guys. So if you are a frequent flyer, you know that I am going to hang out here for a little while. So don't worry. Double click, do a little scrolling. I just put everything back in the chat. So it's not, you don't have to scroll too far. But if there's anything in particular that you need that you don't see, do not hesitate. Just let me know and I will be more than happy to drop that for you in the chat. So don't worry. I'm putting myself on mute, but I am here.